What is up, guys? This is Chris with Leveling Up Your Finances. And as most of you know, right now the market is in a big dip, especially the crypto market is down quite a bit. So I just wanted to go over the basics of like investing in cryptocurrency, pros and cons, and ways to invest. This is an actual blog article put out by M1 Finance. If you do not know what M1 Finance is, it's it's a brokerage application you can use to invest into now cryptocurrencies, but it was stocks, bonds, that type of stuff. And it was, to me, it's more of a set it and forget it. And at the time when I started using M1 Finance, it was the only application where you could buy fractional shares, which I really liked at the time. Again, it's not my main investment account anymore, but I do have one in each of my kids' names that I automatically invest in weekly, and it's just to set it, forget it, and I never have to look at it. But if you like to do it, it's a very hands-off approach to it, and it's a great, I like it personally. So you could, if you want to check it out, go down to the description. I have my referral link there. If you use that, I get some stock, you get some stock, that kind of thing. If not, you can just go straight to their account. That's up to you completely how you want to do it. But anyways, without further ado, let's just jump in. Investing in crypto, pros and cons, and ways to invest. The very first cryptocurrency, as you know, is Bitcoin. It was launched in 2009 for pennies, and now it's about $30,000 as the time of this video. Today, it's the largest blockchain digital coin with a market cap of over 740 billion. That is not accurate right now. It is down quite a bit. We've had some pretty hard weeks, pretty hard months even for the cryptocurrency world. Plus, just the overall market in general. There's hundreds of cryptocurrencies out there. A couple of the other big ones are Ethereum and Litecoin. I do own Bitcoin, Ethereum, and Litecoin just for full transparency, but I do not recommend any of this. This is completely up to you if you want to invest in them. Do your research. Do not take financial advice from an idiot on YouTube, and that would be me. So don't take financial advice from me. This is just an overview, guys. Come on. You got to do your own research. There's other meme coins, there's other coins out there like meme coins that are created around pop culture and internet jokes like Dogecoin. I'm pretty sure you've all heard about it. It had a great run. I don't currently own any, but I did a lot of swing trading on it, and I made quite a bit of money while it was up. And thankfully, I got out instead of becoming a bag holder like so many. So again, it's a very volatile world. Do your own research, know your risk tolerance, and consider your investment strategy. I was doing it for fun with barely any money. My main investments are in stocks. I don't have that much. Well, I do have a lot now in crypto. I do have about 25% of my portfolio, which I do not recommend, but that is only because I am up a lot in crypto, which is great. Even with it being down, I am still up, which I thank God for. Well, anyways, getting back to it. Cryptocurrency is a decentralized peer-to-peer digital asset that runs on blockchain technology without the need for a bank or a payment processor to audit the transactions. Blockchains maintain a continual verifiable record of every transaction that takes place between peers using a public key cryptography. In short, basically, it is not issued or controlled by a traditional financial system like a government or a bank. That is why I personally like crypto. I was not very bullish on crypto at the time when it first started coming out, but over the past couple of years, I've really jumped into it a little bit more just because I see the potential being decentralized, not run by a traditional bank, and no government can really oversee it. Yes, they're putting restrictions and things into place now, as of now, and who knows what it will be in the future. But for now, again, nobody can really control it. It's on its own. It's a global type currency versus a fiat currency, which is like just tethered or attached to a certain country. Because we've seen governments fail. We've seen banks fail. As right now, yes, we are in a dump for crypto, but it has yet to fail overall for the big ones. You'll see a lot of little alternate coins fail, but that's a completely different thing. It is a potential tool to diversify your investments. Again, don't put all your eggs into one basket. It's just a tool that you can use to diversify your investments. And again, that's completely on you. Don't let anyone push you or make you try to invest in cryptocurrencies. It's very new, it's very volatile, and it can get scary like in today's market. At the time when BITO is an ETF that you, or futures ETF, sorry, that you could invest in. And this is on M1 Finance directly. You can buy this through other places, but this is options of investing through on crypto through M1 Finance. Again, you don't have to do it here, but you can invest other places. But this is their options as of now. BITO was pushed out in October. It's a futures. It's vested in cash settled front month Bitcoin futures. Front month refers to futures contracts that will soon mature. And when that happens, the ETF buys contracts for the next month, and then process repeats itself. I got a couple handfuls maybe of BITO at the time in October, and as of this video, it is currently down 55%. So again, I'm not recommending it, but it is pretty low right now. I am holding the bag on that one, but whatever. I'm still up mostly in crypto, so I don't really care. But again, you're just buying futures contracts with this. So it's just one option. You don't actually own the see right here, you don't actually own the digital currencies themselves. Instead, you have a futures contracts that provides exposure to the underlying assets, and it's what people think the price could be in the future, not the actual price. And then just keep in mind, if you do want to do it, ProShares collects a 0.95% and fees. Another way you can do it is blockchains ETFs. I don't currently have any. I've never actually invested in any blockchain ETFs that I know of. I do a lot of little random things here and there, but I can't remember ever owning any of these. So these are on you if you want to go look them up. They're down here. The ones that M1 Finance pushes is Block, BitQ. Here you go, like Ledger, I guess, and then BKCH. And these ETFs basically invest in hundreds of companies developing and using blockchain technology itself. So again, it's not the actual cryptocurrency, it's the blockchain technology that kind of holds everything together. So if you want to go check them out, here's a couple of them. Again, I don't have any real knowledge on them, so that would be up to you. The same with cryptocurrency trust. This is another one that you can look into. It's a virtual currency investment that trade over-the-counter markets. This is Grayscale specifically. These are kind of the ones they do for Bitcoin, Ethereum, and Litecoin. Again, I don't have any experience investing in any of these, so you guys can check them out if you would like to. Mining firms is another one. This is one I do have some experience. I was heavily trading, swing trading, right, and Mara. I don't currently own either, and I've never used either of these two, but I do want to let you know I did have Right and Mara. I did make quite a bit of money off of them. Swing trading, again, I don't even recommend swing trading. I was just doing it for fun and with very little money, less than 5% of my portfolio. It was just the fun stuff to kind of keep finance and investing interesting, because let's be real. If you're really going to be investing, you're investing for the long run, and it can get quite boring. So if you want to keep in it and have a lot of fun, maybe allocate like 1 to 5% for just fun swing trades or day trades if you ever get there, or whatever, or crazy stuff like crypto. Again, that's just my own personal opinion, but you guys do whatever you want. But getting back to it, I go on these stupid little tangents. I don't know why. Mining firms, companies operating data centers that process and verify the transactions on the blockchain. Again, these, you're not investing in the actual cryptocurrency themselves. You're just doing the ones that verify the blockchain. So Riot, Mara, and then you can look into these two. I really like these two. I made quite a bit of money, and I paid lots of taxes on it. But anyways, I digress. You can also explore the digital mining pie. This is specifically for M1 Finance. I would open it, but then I have to log into my M1 Finance. But basically, it allocates a pie that's already pre-made by M1 Finance themselves, and it's their mining pie. So again, you're going to go for the companies that have that ability. So you're going to have, I think it was like 11 to 13% of Riot, 11 to 13% of Mara, this one and a few other ones, right? So again, it's a pie that automatically does by percentages. That's how M1 Finance does it. So if you think about cutting a pie or a pizza, you get percentages of the whole, making 100%. And again, I like it because it's set it, forget it. You don't have, you can do more hands-on if you'd like, but that's just what I use. Public companies that are open about their balance sheet and they actually have Bitcoin on their balance sheet would be Tesla, Square, and Coinbase. So this is more like an indirect exposure to the cryptocurrency assets. It's really, Well, first of all, everybody should be investing in Tesla. Again, don't take advice from anyone on YouTube. I just owned a lot of Tesla. I've made a lot of money off of Tesla. The same with Coinbase. I don't own Coinbase anymore. I never owned Square that I can think of. But Tesla was one of the very first ones that had, I think it was $1 billion in Bitcoin off the top of my head. They were the first to do it. And then, of course, after they do it, a lot of other companies started following suit and holding it. But these are just three of the big ones that M1 Finance is putting out that are public about it. But again, it's like an indirect exposure. So you don't really own any of the cryptocurrency at all. You just own a company that has it on their balance sheet. So yeah, I don't even know why this is mentioned, but that is a possibility if you want to look at institutions now that have it too. So you can look that up. You can just Google it if you'd like. The pros and cons of investing in crypto. It is still considered a volatile asset compared to more traditional investments. Yep, and that's why it's kind of fun and exciting. It's a new area of stuff that we can get into. And again, that's why I like to swing trade a lot of crypto. But I do hold quite a bit just because I believe in the potential it has. But again, do whatever you want, guys. Pros. Crypto enables online transfers of value without the need of a middleman like a bank. This allows for the transfer of value globally with low fees, near instantly, 24 hours per day, 7 days a week, and they don't take holidays, which is great because if you guys remembered back in the day, this is dating myself, of course. I'm only 35, but whatever. If you wanted to send money to somebody else, you had to wire it through a bank, and it was only on business days that it would even take place. So if it was a weekend, the money doesn't transfer. You have to wait. If there's a holiday, you have to wait. You have to do it within banking hours. It wasn't 24 hours a day. And of course, they took a fee depending on the bank that you used. It could have been a minimum fee or it could have been a percentage of the money you were sending. We don't have to do that anymore if you want to use cryptocurrency, which is amazing. I don't know why it took so long for that to happen and why the banks still charge you for wiring money. It's digital anyways when they do it. I don't know how banks work. I don't like banks. Crypto provides exposure to an uncorrelated asset class. Here's some cons. Crypto holdings can be very volatile compared to other asset classes. I don't know. I might actually consider that a pro because, again, if you're going to try something like swing trading or day trading of cryptocurrencies, you want that volatile element to it because that's how you make your money. If it's down 10%, you buy, and then it goes up 10% an hour later, and you sell. You just did 10%, minus 25% for taxes and all that fun stuff and fees. But you get the gist, guys. You want that volatile. That's why right now, when it's down, is a great time to buy. But you may be holding for the long term, especially right now, because we're probably going into a recession or something, or we're already there. I don't know. Who cares? Cryptocurrency hasn't been proven in the long term. Again, it's very new. Bitcoin was just put out in 2009, and a lot of these other coins that are out there are even less. A year, some are out a month, a few years, that type of thing. So it hasn't been proven long term. Anything can still happen. It's still kind of the wild, wild west. So again, that could be a con for most. Cryptocurrency exchanges are not regulated the same as centralized exchanges. So you don't have any insurance on any of your stuff. If it's gone, it's gone, blah, blah, blah. Whatever. Those cons are nothing. But again, you got to assess your risk assessment or tolerance, sorry. How much of your portfolio should be in crypto? Again, cryptocurrency investing is a personal decision. Like many investors, myself included, I was very hesitant about crypto at first, but I started getting into it around 2017 because I just did not believe in it at the time. But then I saw the potential it has and all the fun it's doing, and not just as a cryptocurrency. There's so many other options with blockchains. NTFs are kind of funny silliness that is still kind of big right now. So you have smart contracts. I mean, video games coming out in crypto, like all sorts of craziness. But cryptocurrency itself, I see the potential, and that's why I personally hold and have fun in swing trading. But it is asserting its place among long-term investors. Again, I am more of a long-term investor, and that's why I hold it. A recent survey that M1 Finance put out, 1/3 of long-term investors plan to invest in cryptocurrency over the next 12 months. I'm sure that has gone up by now, or by the time you're watching it, but that is pretty impressive because still not a lot of people are in crypto. If you look at the grand scheme of things, there's not a lot, so it has a lot of room to still grow. Most experts suggest starting with 1 to 5% allocation, asset allocation. I definitely agree with that 100%. I started with very low amount and I just had some fun with it. I then went to about 5%, I would say, and since then my portfolio's probably altogether is probably about 25% allocation. I don't recommend going that high, but again, I am very high, or I have gone up and made quite a bit of money of crypto. Well, I haven't made money on a lot of it because I haven't sold a lot of it. However, I hold about 25% of all my portfolios together in cryptocurrency now. That's just how it happened. It went up a lot. Even now that it's dumped over 50%, I'm still up quite a bit. So that's just my full transparency. But if you're just starting out, 1 to 5% that's your fun money. You still want to put 95% or more into solid investments, guys. Again, that is up to you. But if you guys have any other questions, please just comment down below. If you want me to cover any certain topics, also just comment down below and let me know, and I'll make a video on those. I'll probably do a voiceover like this. At the end of the day, guys, remember that investing is a personal choice. You can get little nuggets of information and advice here and there from people, but don't take advice from anybody else. It's a personal choice on how you want to do it. Also, guys, at the end of the day, remember to stay awesome and keep loving each other. Chris is out.